I think about the world of Bitcoin as digital gold, as eventually being potentially the payment rail for all money. That's a long way off, but I think it could be. And the question I can't answer yet is, if you think about the internet, right? There were 80 protocols. Now we have 5. What happened to the others? They just weren't used. They just went away. And look, the law of increasing returns, Paul Romer won the Nobel Prize for this, saying it's not the best technology that wins. It's the technology that gets critical mass first. And there are lots of examples of inferior tech becoming the tech. And so he says, well, why isn't Bitcoin just MySpace? MySpace had proprietary tech. The Winklevoss twins created this thing. Zuck stole it and said, I'm going to have better tech. Okay, it gets displaced. MySpace goes away. In the open source world, Bitcoin, really good. You invent something better. It's open source. I copy paste, Taproot, SegWit. We can add on to make things better. And that was the beauty of Red Hat, is this open source world allows a technology to iterate and become better. And so I think it is the chain to rule all chains. Now, that doesn't mean there won't be other chains and other use cases. I'm still pretty bullish on Ethereum, and I'm bullish on a few other projects, but I definitely believe Bitcoin is an asset class, and it should be in everyone's portfolio. Not the whole portfolio, but everyone needs to have it. And the reason is, the way you build a portfolio, and Markowitz again won the Nobel Prize for this, is you take assets that are uncorrelated, that are risky, meaning they have volatility, and you combine them. The riskiest asset you could ever own is cash. Now, it's the safest in the short run, but over the long run, it's the riskiest because you're going to get chewed up by inflation. And you're going to lose purchasing power. So what do? You take bonds, which have a risk of default, and you add them to cash. And your risk goes down because now you have a better portfolio because they're uncorrelated. Well, then you add stocks, and the risk goes down. You had hedge funds, the risk goes down. You had venture capital, the risk goes down. You had Bitcoin, the risk goes down, not up. You're like, no, it's so volatile. Who cares? Amazon and Bitcoin have the same volatility, 80%, 80. Amazon has been a public company 27 years, just had their 27th birthday. They've had a double-digit drawdown every single year, including this year. Went down 22% this year. Every single year, double-digit, average 31%. On average, you lose a third of your money every year. When was the right time to sell? That would be never. Who bought it at the IPO and held for 27 years? There's only 5 people. Jeff, mom, dad, ex-wife, and Bill Miller. Bill Miller's cost is 7 cents. But he's held it the whole time because he understands value. He understands technology. What people don't understand is the reason no one complains about owning Amazon is hindsight bias. Well, it was successful. Well, Bitcoin is the best performing asset of all assets, 11 out of the last 14 years, including this year. People are like, no, that's not true. It's just math. Over the whole period, it's not close. Now, the first 4 years, I don't really count them. It was a science experiment. We weren't sure it was going to work. We weren't sure if it was going to get critical mass. To go from fractions of a penny to $1, let's take that out. But the last decade, that counts. And over that last decade, it crushes everything else. And it's 0.0 correlated to bonds and 0.15 correlated to stocks. So when you add it to a portfolio, your portfolio becomes more efficient and better. And had you put 1% in 5 years ago, you would have had 250 basis points per year better performance with less risk. How can you not have that? I don't know.
I love how you call Bitcoin schmuck insurance. That's something that always cracks me up every time you say it. Okay, Mark, final question. You're in an elevator with a stranger. You got 45 seconds to orange pill them. What do you say?
Well, I would say 2 things. One, think of Bitcoin as an operating system for the Internet of Value. Okay? Think of blockchain technology as an operating system, no different than iOS and Android or DOS and Windows. And think of Bitcoin as a diversifying asset, the same way you would gold or hedge funds or venture capital or real estate, that's uncorrelated to stocks and bonds and will make your portfolio more efficient. And finally, we know that great fortunes come from embracing new technologies. This is simply a new technology. It's an evolution of computing power, no different than the internet, no different than mainframe computing, no different than the PC. And every time you invest in one of those big trends, it works out great.